Hello everyone, welcome back to my channel, The Learning Path. This is Dr. B. Meena, Head Department of Commerce and Vice Principal Shift 1 from Petition College of Arts and Science, Adayar, Chennai. In this video, I'm going to teach you one more problem on how to prepare process accounts with abnormal loss and gain and how to prepare the ledgers for abnormal loss account, abnormal gain account, and abnormal loss and gain along with the normal loss ledger account. Let me check one problem. To have more understanding, click the I button to understand the concepts relating to the process costing to watch my previous videos. And let me check one more problem under process accounts with abnormal loss and gain process accounts. A product processed through three processes, 1 and 2 and 3. The following relate to the three process during September 2008. So look at the informations. We have materials, labor, overheads. These are the expenses to be debited in the respective process 1, 2, and 3. So we have what is the amount applicable for each and every expenses specifically for process 1, 2, and 3 separately, and the total as well as it is given. And then the actual output for each process also given, 450 for process 1, 340 for process 2, 270 for process 3. The normal loss percentage for process 1 is 10%, and 2 is 20%, and 3 is 25%. The scrap value for each normal loss is 2 rupees for process 1, 4 rupees for process 2, and 5 rupees for process 3. And look at the para. 500 units at rupees 4 per unit were introduced in the process 1. So this is the input we need to give it in the process 1. That is the input we need to give it in the process 1 that must be debited as a first item in the very first account process 1. Production overheads is absorbed in the ratio of labor. So what is the overheads given this problem? 7,330, but it was given as total, not specifically for process 1 and process 2 and process 3. So we need to apportion this overheads 7,330 in the basis of labor. So what is the labor for process 1, labor for process 2 and process 3? In the same basis only we are going to apportion because both the amounts total were same. Okay, that's what is given in the paragraph. Prepare the process account, abnormal loss and abnormal gain. So when compared to the previous video, we had a discussion to prepare only the process account. In this video, additionally, I'm going to teach you how to prepare the ledgers for abnormal loss account and abnormal gain along with the normal loss account. Let me check the solution. First, I will prepare the process 1 account. As usual, we can have the columns, particulars, units, rate, amount for both debit and credit side. On the debit side, I posted the input, which is given in the paragraph, 500 into 4, 2000. And I debited all other expenses as per the problem. Look at that. 500 units is the first item I showed, where the rate is 4 rupees. So 2000 is the value. Then I debited all other expenses, which is given the problem, materials 2600 and labor 2250. And overheads is also absorbed on the same basis. So again, I will show the overheads is how much only? 2250 only. That's what I showed on the debit side. I think you understood. I have an understanding over the debit side items. Then I'll move on to the credit side by normal loss account. So what is a normal percentage? Loss percentage is given for process 1, 10%. So 10% is applicable on what the input I'm giving. So 500 into 10%. So you will come to know what is the loss. That is 50 units. And each unit, the scrap value is given the problem is how much? 2 rupees. So that's what I applied here, 50 into 200. Then I have to compare the input and the output. So output for this process given as per the problem is 450. If you have a doubt, please check the problem. Look at this, 450 is the output for process 1. So this 450 is the output for process 1. That is going to be an input for the process 2. That's what we mentioned by process 2 transfer account. So 450 is the output and 500 is the input and 50 is the normal loss. So there is no abnormal loss and abnormal gain. Okay. So 500 is the input, 450 is the output, and normal loss, it's come 50. So it's getting tallied. So no abnormal loss, no abnormal gain. So I will close the debit side with the units column total and amount column total. Then how can I calculate the rate per unit for the output? 9,100 minus what is so far I credited 100 divided by 450. That's what I mentioned in the workings. Cost per unit of process output, total of the debit minus so far the amount credited 100 divided by, for what I'm calculating the rate per ton, only the output. So 450. So rate per ton is, sorry, rate per unit is 20. So 450 into 20, 9,000 is the value. So this values, which is shaded in the yellow color, will be transferred to process 2 account as an input on the debit side. Okay. So I think you had an understanding, clear cut understanding on how to prepare the process 1 account as per this problem. The next is process 2 account. I transfer the input from the previous process, whatever output I got in the previous profit, that input, that is output, will become an input for the process 2. Then as usual way, I debit the other expenses. If you have doubt, please check the problem. So look at that, process 2, materials value is 2,000, labor is 3,680. So overheads also will come 3,680. So I debited all the values, and normal percentage is how much? 20%. Each unit of normal loss will be sold at 4 rupees. So now look at that, how I showed. Debit side, you had an understanding, that is assume myself. So the output of the previous process will become an input of this process. Then I'll move on to the other expenses. By referring the problem, I debited all other expenses. Then I'll move on to the credit side. By normal loss, what is the input I gave? 450. 450 into 20%, I'll get the units as 90. So 90 into 4, what is the value? 360. Then I have to check out what is the output of this process 2. What is the output of the process 2? 340 it is given. So 340 is the output which is given for this process. I need to check whether I have abnormal loss or the abnormal gain. So how to check out means 450 is the input, and then 340 is the output, and normal loss is 90. So 340 plus 90, it comes 430. 340 plus 90. So 430 is coming. The calculation is coming 430 out of the input. 450 means what could be the abnormal loss? 20 is the abnormal loss. So I calculated the abnormal loss is coming as 20, and 340 is the output. Then if I came to know there is the abnormal loss means, so we can close the debit side. Okay. So 450 in units column, amount column is 18,360. Then how can we calculate the cost per unit? Look at the calculation. 18,360 is the total of the debit side, minus so far I credited 360. So minus 360 divided by what and all I'm calculating the rate per unit for the output as well as the abnormal loss. For both the things only, I'm calculating the rate per unit. So 340 abnormal loss means you need to add in the denominator. So 340 plus 20, what is the rate per unit I'm getting? 50 rupees. Then I substituted for abnormal loss and the output. So 20 into 50,000, 340 into 50, 17,000. Then I'll close the credit side. So this is the way how can I prepare the process 2 account, and this process 2 output will transfer to the next process as input, which is shaded in the yellow color. Okay. Then the next process I transferred here. Then I debited the expenses in as usual way. Then I will move on to the credit side. The percentage of wastage is given in the problem is 25%. So 340 into 25. Look at the problem. What is the percentage? Loss, 25%. The scrap value is given as 5 rupees. And all other expenses I debited 1,000, 25,400. Again, overheads I will show 1,400. So percentage loss is 25%. Scrap value is 5 rupees. Okay. So that's what I did it here. And 85 into 5, 425 is the scrap value. Then Since it's a last process, I can term the output as by finished stock account. What is the stock is given? That is, I mean, the output is given in the problem. The output of process 3 is 270, right? So I transferred here 270. Then I need to calculate whether I have an abnormal loss or abnormal gain by comparing the input and output with the normal loss. So 340 is the input, right? And my output is 270 plus 85. So when I'm doing this calculation, so I will come to know this is a, once again, so 340 is the, once again, okay, sorry, 340 is the input I'm getting here. 340 is the output, okay. And I will move on to the process 3 account. Process 3, I debited the output as an input for this process. I debited the expenses. Then I calculate the normal loss and I showed the output. Then how to calculate the abnormal gain? Abnormal gain, here it is, 15 it is coming. How to calculate the 15? Now look at the calculations I made. What is the output? 270, right? 270 plus what is my normal loss? My normal loss is 85. So my normal loss is 85. So if I did this calculation, then definitely I'll come to know there is an abnormal gain. So abnormal gain, how to work out that? So check out this problem. So once again, okay, so that is a small mistake I did. I corrected here. So 340 is the input. Out of this input, 85 is the normal loss, 270 is the output, means what is my abnormal gain? 15. Okay, because I'm getting 355. So 270 plus 85, 355. So 355 minus 340, that is an abnormal gain. So if you came to know you are getting an abnormal gain, means you have to do the rough totaling of the debit side to calculate the cost per unit for both abnormal gain as well as for the output. Okay, so what is the total I'm getting for the debit side? If I am considering 17,000 plus 1,025 plus 1,400 plus over 1,400, it will come around 20,825 minus what is so far credited, 425, then divided by what is the output, 270. If I getting abnormal loss, I told in the previous video, you need to deduct the denominator 15. So what is the rate per ton? 80 rupees. So rate per unit is 80 rupees, which is applicable for both abnormal gain as well as finished stock. Then 15 into 80, 1,200, 270 into 80, 21,600. Then we'll close both the debit and credit side. Units column 365, amount column is 22,025 rupees. So this is the way how I can end the last process. So in this problem, we have additional questions to prepare the accounts for abnormal loss and abnormal gain account. I will teach you how to work out the abnormal loss account. Abnormal loss account I'm preparing now. We have both debit and credit side with this columns, particulars, units, rupees, particulars, units, rupees. And you need to check out the previous process, in which process we are getting abnormal loss. Are you getting abnormal loss in the process 1? No, you are not getting either abnormal loss or abnormal gain. Only in the process 2, we have abnormal loss. So here I created, right? Then how can I show this item when I'm preparing the abnormal loss account? Here I credited, so it will come as a debit account. In which process I'm getting the abnormal loss? Process 2. So 2 process account, 2 process 2 account, transact the same values, 20 units. with the 1000 rupees. And then I need to give this abnormal loss if I'm going to value at the scrap rupees 4 per unit. What is the scrap applicable for the second process? Second process scrap is how much? 4 rupees. If I'm going to give the value, scrap value 4 rupees for this abnormal loss, then what could be my cash account? 20 into 4, 80 rupees. So whenever you have abnormal loss, look into the respective process and debit the abnormal loss in the respective abnormal loss account under which process you are getting. So two process two account, and then value that abnormal loss as per scrap value. So 20 units into 4 rupees, 80 rupees. The balancing figure must be transferred to the costing penal account. Out of 1000, 80 rupees is a scrap value, means what is the amount to be transferred to costing penal account? 920. So this is the way how you can prepare the abnormal loss ledger. Okay, then how to prepare the abnormal gain account? You need to check the previous process, which process we are having the abnormal gain. Not in process 1, not in process 2, only in process 3 I'm having abnormal gain. Here the abnormal gain is debited, means there we need to credit it. Now look at the abnormal gain account. By process 3 account, I credited the units and the value. Then I have to give the scrap value for the 15 units. So two normal loss account, two normal loss account. Here you should not write cash account because it's abnormal gain, right? So gain, if you are going to consider as a scrap value, what is the loss of scrap income? What is the, because since it's a gain, again we are going, if it is a abnormal loss, means we can have some kind of scrap value that is going to be loss for us. So loss of scrap income, how much? 15 units into 5 rupees means 75 rupees. So this is the normal loss account to be debited for this abnormal gain. So this abnormal gain, 15 units, must be converted as per the scrap value to be debited in the abnormal gain account, the term of normal loss account. Okay, then find out the balancing for 1200 minus 75. What is the balancing with 1125? This amount is to be transferred to the costing P&L account. So this is the way how you can show the abnormal gain. Once again, repeat. Look at the previous process, which process you have abnormal gain, their abnormal gain debited. So it will be credited here in the respective process name. Then you need to value this abnormal gain as per the scrap value, then find out what could be the loss. As per this problem, 15 into 5, 5 rupees is scrap value for the process 3. Okay, so take the respective scrap value, don't take other values. So 15 into 5, 75. So 1000 out of 1275 rupees is the loss, means what could be the profit? 1125 is my profit. That has to be transferred to my costing P&L account. Apart from this, in this problem, they didn't ask you normal loss account. Anyway, I will teach you how to prepare the normal loss account. So normal loss account, whenever I'm going to prepare the normal loss account ledger, we have a normal loss in all three processes, which is credited. Okay, we have a normal loss. You can check out. So this is the normal loss, process 1. Here we credited. This is the normal loss we credited in the process 2. This is the normal loss we credited in process 3. So all it is credited. When I'm opening a normal loss account, that must be debited in the respective process names with the values and units. Okay. Then where the normal loss again coming means, just now we prepared the abnormal loss, abnormal gain, where we debited the normal loss. So here it is debited. When you are bringing under the normal loss account, it should be credited under what account? By abnormal gain account. Okay. Then how to end this ledger? Listen clearly. By cash account, I didn't value that normal loss as it is there, 50 into 100, and process 2, 90 in 360. Only in the process 3, we have 85 units. That abnormal gain we lost is 15 units, right? So what is the balance I'm getting? 80 minus 15. Just listen clearly. 85 minus 15. So I'll get 70 units. 425 minus 75, then I'll get the balance as 350. So since we don't have any adjustment with the process 1, process 2 normal loss, we will transact this amount to our cash account. But regarding the process 3 normal loss, we encash, there is a loss of income 15 and 75, right? Isn't it? So 85 out of 85 we lost 15, means what could be the unit? 70. Out of 425, 75 is a loss, means what could be the amount to be credited in the cash account? 350. So this is the way, this yellow shaded value is the value we calculated after comparing the abnormal gain as well as the process 3. 85 minus 15, 425 minus 75. So this is the way how you can prepare the normal loss account. So in this video, I taught you how to prepare the process account when you have a abnormal loss and abnormal gain, and how to prepare abnormal loss account, abnormal gain ledger account, and along with the normal loss account. Thanks for watching my video. Click the bell button, subscribe my channel. I'll teach you one more problem in process account in the next video. With this, process costing will get over. And the next videos, I'll concentrate to take marginal costing. Thanks for watching my video.